The IRS wants every last penny from you, and they are warning taxpayers of the new $600 threshold for apps such as PayPal and Venmo. What does this mean? And more importantly, what does this mean for you? So the IRS is going after the little guy, anyone making money through a part-time job, a side gig, or even selling tickets to a Taylor Swift concert, or even selling an old pair of Jordans. They want every last penny. So if someone receives more than $600 through an app such as Cash App, PayPal, or Venmo through these transactions, they'll have to file a 1099-K. And here's the crazy part. Prior to this year, the threshold for a 1099-K was at least 200 transactions and $20,000. But following the American Rescue Plan Act of 2021, the threshold has been lowered to just one transaction and $600. And I hate these names they make up. The American Rescue Plan Act. This is not saving anyone. This is only harming everyday Americans. And the IRS stated this is for business type transactions. It is not for personal transactions. So if someone receives money for their birthday, or maybe someone went out to dinner and their friends sent them money in return, these are not supposed to be taxed. But it can get very complicated because how will the IRS or these apps know exactly what is personal and what is a business type transaction? And the challenge with the new lower threshold amount of $600 for Form 1099-K is that personal payments and reimbursements could be incorrectly reported as taxable transactions. So if you use these apps such as Cash App, PayPal, or Venmo just for personal transactions and you receive more than $600, it is very possible that you will still receive this Form 1099-K. And when you receive this form, a copy will also be sent to the IRS. So if you do receive this form, don't ignore it. The IRS has a copy. So if it really is through business type transactions, then you'll have to pay taxes. But if it's really just for personal expenses, at the very least, you'll have to clear this up with the IRS. And that's where these accountants will come into play. I see two people really making money from this. Number one, of course, the IRS, and number two, accountants, because this is going to be really complicated and very messy. But that's exactly how it's supposed to be by design. Could you imagine if every American understood the tax code in and out? If that were the case, the IRS would never receive any money. Those with a lot of money, the whales, they have accountants that know the tax code in and out. This won't affect them at all. The only person this will affect is the small-time everyday citizen. And I want to show you how complicated it can get. So if someone is actually running a small business and they're using these apps for payments, then fine, that makes sense. Pay taxes on it. But what about someone who sells something actually for a loss? For example, let's say someone has a garage sale and they sell a couch or a bed, and they paid actually $3,000 for that couch, and then at the garage sale, they sold it for $1,000. They actually lost $2,000. But if they receive that $1,000 in a Cash App or PayPal or Venmo, the IRS and the app will look at it as if they made $1,000. Then the IRS will go after that taxpayer and say, you owe taxes on this $1,000. But what if the taxpayer comes out and says, actually, that was a loss. I paid $3,000 for that couch, and now I sold it for $1,000. Are you going to give me the tax write-off? So the IRS is going to go after people making money, but will they also give us the other side of the equation? If they're going to treat the little guy like a business, well, give them those tax write-offs as well. But I don't think the IRS will do that because that will backfire and they'll probably end up losing a lot of money. So if the IRS wants to come after our small-time gains, well, let's play the other side and defend ourselves. And if we have a tax write-off, we'll let the IRS know. That is one way we can fight against the IRS. And there are also big players in the space that are fighting against the IRS. For example, Etsy and eBay have formed the Coalition for 1099-K Fairness in order to, quote, protect casual online sellers and micro businesses from unfair tax and privacy burdens. And let me repeat that again. Online casual users and micro businesses, maybe not even micro businesses. That is how small these transactions are. They want to go after everyday people who are not actually running real businesses and treat them like a business. But at the same time, they probably won't give the advantages of having a business, including those tax write-offs. And Zelle claims they are able to circumvent this IRS tax rule, and they stated, quote, Zelle facilitates messaging between financial institutions but does not hold accounts or handle settlement of funds. So according to this technical loophole, Zelle claims this rule does not apply to them, but I don't see this happening, right? The IRS, they're paying attention. Either two things will happen. They will extend this law to Zelle, or at the very least, they will go after users who migrate to Zelle to try to get away from taxes, and they will audit those individuals. This American Rescue Plan Act is not saving anyone. The big guys who already have their businesses set up, legitimate businesses, nothing will change. The only thing will change is that your everyday average citizen will be taxed on goods that should not be taxed. Again, selling tickets to a concert or selling your old couch. This is crazy, but I want to know what you guys think in the comments down below. Thank you for listening, and I'll see you next time.